Welcome to you, to all of you, to the second webinar of the Road to TGS webinar series, which is being jointly hosted by NuVentures and TiE Bangalore. I'm Ritu Sharma, and I serve as the Executive Director for the TiE Bangalore chapter. The TiE Global Summit is upon us, and it is one of the biggest entrepreneurship events globally, which will be held in Bangalore this year in December. And in the run-up to TGS, TiE Bangalore and NuVentures are hosting a series of webinars, which are linked to the TGS 2024 theme, which is putting entrepreneurship first. And on that note, I'd like to invite Madan Padaki, who's the president for the TiE Bangalore chapter and also part of the board of trustees for TiE Global, to take this forward. Over to you, Madan.
Thank you, Ritu. Hi, good morning, everybody. Namaskara. And wishing all of us a very, very happy Dasara. Thank you for joining in large numbers. We've got a huge number of registrations for this event, and rightfully so. We've got stalwarts here to talk about a very, very important topic. Vani, Prashant, Sanjay, thank you for taking time out to do this, and for a huge round of applause from all of us for all the contributions that you make to the ecosystems to really build India into a more thriving entrepreneurial nation. And Venk, delighted to collaborate with NuVentures on this initiative. The Road to TGS also has another large mega event in Bangalore, which is the Bangalore Tech Summit. We're collaborating with the BTS as well. And this is will showcase the power of technology and innovation in Bangalore, and the BTS, which will focus on that, and TGS will focus on the entrepreneurial energy that exists and how do we elevate that to the next orbit. For us, the TiE Global Summit happening between 9th to 12th of December in Bangalore on the 9th, 10th, 11th, and 12th in Mysuru is just not another event, but I think it is three things. One, it is a fantastic reason for us to celebrate the super strides that the Indian entrepreneurial ecosystem has done over the last decade or so. It's also time to relook and reimagine the future. What does the next 10 years look like, and what is the path that we are laying ahead for ourselves? And third, it is also an event that will bring a variety of collaborators to come together to figure out how do we really put entrepreneurs first and entrepreneurship first, and support the journey of millions of entrepreneurs like all of you who've joined here to take India to the next orbit, and of course build products from India for the world. We are going to have a range of investors, angel investors, ecosystem actors from across the world coming in, and it is our opportunity to kind of reflect, to figure out what we can do together, and forge collaborations that will last a long time. These series that we're doing is one of the critical paths that we have, so that we can prime all of us for the upcoming TGS that's happening. Venk will also subsequently talk about the TGS 100, where we are trying to identify the 100 most promising startups that TiE and the entire ecosystem can support over the next few years. I know there's a huge amount of knowledge and wisdom and insights that will be shared over the next hour or so. I don't want to take too much of time. Please do visit tgs2024.org for more details. We look forward to having all of you with us at the TiE Global Summit in Bangalore. Without further ado, let me hand this over to Venk, the founder of NuVentures. Venk is an entrepreneur's investor, an investor's entrepreneur. I mean, he fits many molds, and delighted to have you lead this, Venk. Look forward to working and doing this together. Thank you. Over to you.
Yeah. Thanks, Madan, and thanks, Ritu, for giving us the opportunity. So in the interest of time, I'm not going to spend too much on introductions. I think the people we have on the webinar are people who are famous in their own right and needs no introduction. So I'm going to start with saying, despite the global economic uncertainties, India's startup funding ecosystem has shown resilience, right? While 2023 saw a funding winter, 2024 has witnessed a resurgence. Indian tech startups have raised over USD 4.1 billion in H1 2024 and 4% higher than 2023, H2 2023, remaining the fourth highest funded country globally. Now, before we dive into the discussion, I wanted to highlight why we decided on this topic. Fundraising is surely a key part of a startup's journey. From seed funding to pre-IPO rounds, founders are frequently in fundraising mode. In fact, most founders are always in a fundraising mode. But there are crucial mistakes founders make, especially at the very early stages. So we thought it would be best to hear from leading VCs on what founders should keep in mind and how to go about fundraising successfully. Once again, we have Prashant, Prakash, founding partner of Accel, Vani, founding partner of Kalaari, and Sanjay, the founding partner of NuVentures, who have all been leading backers of early stage startups, many of which have turned into unicorns. Several went on to get acquired, and some are also hitting the public markets. This discussion holds significance, especially in the run-up to the TIE Global Summit. And as Ritu mentioned, NuVentures is also sponsoring the TGS 100 challenge, where early startups can pitch to a grand jury and look to win from a pool of rupees 50 lakhs. So you can also ask at the end of the thing, we are going to leave the chat open. People can ask questions. In fact, we want people to put in their chat in the chat box, and we will take it up, right? So having said that, without further ado, let me go to Vani. Vani, let us first get a sense of the current funding scenario, because as per Traction, which is a data analytics company, there was a slight year-on-year drop in tech startup funding in India in the 9 months of 2024. Seed stage funding has also been lower than last year. Some people have said that there was a funding winter in the startup ecosystem over the last couple of years. But as I said earlier, things have been looking up, and we have, and now with the rate cuts as well, it should help. Now, Vani, do you think the pace of investment will pick up now?
I look at this from a slightly different perspective, Venk. There is today more than ever tremendous interest, even globally, in what is now called the India Alpha Opportunity or India 2047. Funding always follows opportunity. Returning capital, generating great returns. Those are the simple economic principles, whether in public or private markets. And if you see in the private markets, in the venture capital market especially, for India, in the last few years, you have 3 funds here. Almost all of us have returned more capital in the last 3 years than we have in the first sort of 10 years of our of the rise of Indian VC ecosystem, if you will, right? So the slight decline that we are talking about, to me, it's almost a conversation, that may be interesting but irrelevant. I think Traction data says there is like 7% decline or whatever. And even in public markets, we experience these ups and downs, and it's not a winter to me, something systemic, a systemic recession and a foundational capital market challenges. I don't believe we have that at play right now. We don't have any systemic issues. So the normal ups and downs, I don't think we need founders to place so much relevance on it. What's important is what you just mentioned, Venk, which is how do I avoid the classic mistakes? How do I focus on a great opportunity for which I can dedicate next 10, 15 years of my life? So especially in seed and series A, the growth, there may be certain sentiments that have significantly changed with higher focus on quality of revenue and evaluating long-term moats. I think in seed and series A, I don't see a funding winter, to be honest with you. I think it's a great time. If I was younger, I would love to be an entrepreneur, go build a company. All young people should focus on, exploring their entrepreneurial dreams now.
Great. Thanks for that. Okay, Prashant, now to you. Obviously, you have been investing in startups for around 2 decades now. I think you were the guys who got in the Flipkart exit, which changed the ecosystem to a large extent. But now almost every startup in India claims to be an AI first startup, right? So when they are raising funds, how do VCs like you identify who's building real AI and solving problems in India using AI? Because as per economist, I was reading an article. It says 8% of the top researchers are from India, but almost zero work is focused on any India-centric problems. So I had that. Prashant, can you give your insight?
So, Venk, AI is, of course, a phenomena that is 2 to 3 years in the making, right? So, if you look at a lot has changed in the US in how customers buy products, how enterprises want to invest in their R&D and rewire their entire digital strategy, right? So I think it's important to understand that it takes some time for some of that to actually be understood by entrepreneurs here in India. I mean, we were in this whole SaaS world, and now the whole SaaS world is transitioned into an AI world. It's no longer about SaaS, and a lot of existing businesses, of course, can leverage AI, right? So while AI has a lot of net new businesses that will definitely be opportunities, and Indian entrepreneurs will participate in those opportunities, I think a lot of the current businesses in India, in our portfolio and across the globe, are adopting AI in ways that improve their future modes, that improve their ability to be more efficient, deliver better profits. So even this journey is early. In fact, there's a lot of talk in the US that the investments in AI still are not commensurate with the value that businesses are getting out of AI. And all this talk, I think, is in the early days of any technology. It was the same thing was the case when you had the internet, the whole cloud phenomena, and so on. So I think Indian entrepreneurs will get a lot more conversant in the opportunities and be able to tackle. But one definite difference is, I think, the cross-border ability to be able to understand customer needs and be able to build with local US design partners and companies there in the US. I think that has become, I mean, that cycle, that iteration cycle is a lot more important. You can't, it's very difficult, like in some of the early SaaS days, we would build a little bit remotely from India, be able to work with some Indian enterprises and build products. I think that cycle time has compressed significantly. Things are moving so fast in the US, and there's so much investment in AI in the US. I think it's a new challenge for Indian entrepreneurs to be able to be relevant in this really fast-paced AI world in the US. And we have to see how our entrepreneurs kind of rise to this challenge and are able to understand this changing landscape in the US and participate in it. It's early days.
Yeah. Thanks, Prashant. Sanjay, you want to chime in on what Prashant said on the AI focus and the cross-border? And since you are in San Francisco, what are you saying?
Sure. So, just to begin on a lighter note, we've seen so many companies which have .ai right after their company names. I've also seen cases where the founders also have AI in their names, right? And so they play around with that. But I think if you think about this, there's definitely a revolution happening. And I think India's at the forefront of it. Today, we don't have to sell India, right? I mean, right from a Google or a Microsoft, which are being run by Indian CEOs, I think the key question is that what are those use cases and how are you solving for the customer? I mean, I'll just give you some examples. Now Y Combinator, for example, has 4 batches, and at least half of those, are focused on Gen AI and AI. And some of the valuations you could argue, they make sense, do they not make sense? I think Vani and Prashant both made some very first principle points. You have to design it for the customer. What is that customer problem you're solving? It can't be a solution that's going, to look for a problem, but the other way around. And since this is about, VC fundraising, I think if you solve that customer problem and it's scalable, the investors will follow. So I agree. I think this is a great time for, building from Bangalore for the world. In fact, when, the way Blume looks at it, we say there are 2 Indias. One is built in India for India, and the second is, we call it, of course, built from India, but built from Bangalore for the world. So I think we are in pole position to build for that, but we should never lose sight of what customer problem is solving. And then those, like I think Prashant talked about design partners, Vani also talked about it. I think if you can quickly accelerate those design partners and get from POC to customers, then you can scale up. So it's a great opportunity to again for entrepreneurs to build, and specifically build in cross-border AI.
Yeah, but Sanjay, I want to take you up on that. From an early stage, while the path to profitability is the focus for every company, both growth stage and late stage investors. When it comes to early stages, what are investors like you looking for? Because we are now seeing founders who are just starting up, also making projections of profitability in the 3rd or 4th year, right? Is that being realistic? What is your advice to early stage founders looking to raise funding today on how they should think about profitability?
Sure. So, again, Venk, just going back to first principles, I think, one piece of advice for founders is, adopt those practices and come up with a plan and a path to profitability, because it is the right thing to do, not because investors are looking for it, right? So I'll just share what has changed in the last, Vani and Prashant have been in this longer than we have. But I think one of the critical tenets of a business is to eventually become profitable and to, build a profitable business. If you go back, I mean, to all our business school books and everything, I think somewhere, it's not like it's suddenly fashionable to be profitable. You have to be profitable. I mean, that's a core tenet. So more than, I think, I'll tell you what I would not look for an answer. Oh, in year 2, we're going to become profitable. But what is the path to profitability? Why are you building what you're building? When is it going to turn profitable? How are you going to balance profitability and growth? It's more like a discussion, a conversation. Now, I think what is again interesting for India and for TiE Bangalore and just TiE in general is our public markets are very attractive. If you look at the bar, for example, going Prashant and all had a very successful IPO with Freshworks. Vani's also had successful IPOs there. Today, the bar to go public in the US is high, right? The bar is much higher. And in India, I think if you can have a slightly lower base, of course, you have to still be ambitious. But if you're profitable, suddenly that's become a very attractive avenue, which was not the case about 5 or 10 years ago. So, that's an additional avenue. And I would say, we're looking for more I would say it's like a case study, right? Looking for how thoughtful the entrepreneur is, rather than looking for like a firm answer. Okay, we're going to turn profitable in year 2 or 2.5, but how the founder's thinking about positive unit economics, how are they going to balance profitability and growth? So it's certainly important. I think the last thing I'll say, I think early stage investors, we look for team, we look for TAM, which is the total addressable market. And then what is really unique about, your team to solve that, because many of the spaces are so crowded. If you look at YC's approach, they've taken a sort of index approach and saying, we will just attract the best Gen AI companies and, whichever takes off, we are going to win. But, as VCs, we can't do that. We have to be much more thoughtful.
Great. Vani, I'm coming back to you. According to what are some of the common mistakes founders make when they approach early stage investors like you? For example, are they usually too optimistic of the target market size? And in fact, there's always a thing, is the market size, I hear, we have a market of 1.2 billion people, but is that a misnomer? For example, are they usually too optimistic of the target market size, or are their projections exaggerated? Since you are also part of the grand jury of the TGS 100 Challenge, what's your advice on the mistakes founders should avoid?
Yeah, so I mean, there are so many things, but let's just pick a few areas. One is they're pitching to VCs. Every VC is different. Every firm has, at the 100-foot level or 1,000-foot level, we are all the same. But everyone has their nuances on what they look for and what they're familiar with and so forth. I think doing some research ahead of time in who you approach and how you can stage that conversation, I think is very important. Oftentimes, and you can't be desperate about this, right? People will invest or not, but you have to have confidence in your business. And about the market size, I know there is a myth that, and I really believe it's a myth, that VCs want to hear a very large market opportunity. That's like saying, if you look at the early e-commerce companies, they started in India, and this is true globally, early entrance into the market, let's say 2007, plus or minus, when some of the current very successful e-commerce company got started, right? And today we understand there is Bharat, there are many other models, but their target was not 1.2 billion or 1.5 billion at that time. It had to be urban, it had to be people with certain digital literacy, density mattered from logistics and so forth. So a market grows. Now, and you cannot be pitching what your company may be 20 years from now or 10 years from now, because you have to first succeed in the next 1 to 2 years, that chasm. So very focused on who is your early adopter and that deep clarity of thought, and how can you get to own that market so that you can get to the next and the next and the next cohort. A company is never static. A vision is not static. Product is not static. But you have to build your first moat in order to be able to get to your second and the 10th and the 100th if you continue on as a company that's thriving and surviving 2-3 decades. But your early investor or any investor is looking for what can you do in the next 2 to 5 years, and building clarity in their head, clarity and conviction in their head on the market opportunity, on the financial projections, and the clear differentiation. Oftentimes, to a future that is too far, the entire focus goes into that. I think that's not required. I think the more clarity on what you're going to do in the next 2 to 3 years, I think is very, very important. And, whether you believe in monetization, don't believe in monetization, I think that clarity to when then will your monetization strategy kick in is also very important. So on a market size, the most common mistake is people tell me we are in a, recently we were talking earlier, Venk, someone was pitching me that their market is $40 billion. I mean, that's like a turnoff, at least for me, right? Because in the next 2 years, if you get to a revenue of 4 million, considering this is an early stage company, I'd be quite happy actually. And how are you going to get to that 4 million? And then maybe from 4, you get to 40 million by the time you are a 5-year-old company, and you have that opportunity very clearly defined. So ring fencing the opportunity, which requires differentiation and clarity and a deep conviction about your customer and what their problem is and what their needs are and how you are uniquely positioned to validate that. Those are the things that I think really matter. And even yesterday, somebody was asking me, when should we pitch to you? Is it too early? we are a seed stage company. I said, no, I mean, seed, pre-seed, Series A, these are all very sort of fluid definitions. It has to do with where are you in your journey of having that clarity and conviction and differentiation very well defined for yourself. And the more there is discovery of a market, more where the strategy is unclear, there I think there is display of what capital to raise and how long it might take to even validate if there is a market or not a market. So I would say the stronger your clarity and conviction, the stage matters lesser, at least in my opinion. So go with a well thought out plan. Don't try to fall for the myths that people tell you, what the investor want to hear. Focus on what do you want the investor to hear, and either they are the right investor for you or not the right investor for you, and you can't change that anyway. So the more you focus on your own, what do you want to build, and be very clear about that, pitch that only. Don't try to change your pitch to something somebody has told you that the investor would like to hear. So that's what I would offer.
Great. Thank you, Vani. Prashant, I have this question for you in a similar vein. Are there some key gaps you see with startups across different stages of fundraising, from the first meeting versus the diligence versus the IC meeting? Do you want to tell founders who are listening right now, and also those who may be applying for the TGS 100 challenge, on what they should keep in mind during these different stages?
Yeah, so Venk, I think, like you said, if you have to break it up into, your very first meeting that Vani spoke about, where you, in addition to some of the points Vani made, I think it's very good to establish why you are the right founder for that kind of a product. This whole idea of a product market fit is very important, of course, like what Vani spoke about, but I think the founder market fit is also something I think VCs are getting very nuanced about these days, because they've understood a little bit more on what kinds of founders can build what kinds of companies in India. And they have companies that have scaled significantly. So you've seen, the capabilities of some of these founders and the type of different characteristics that these founders should have if you're building a very Bharat rural agri startup versus a startup which is solving for the top 1 million people in India, right? So I think that is an important thing to establish in the first meeting, why you're the right kind of founder. I think the second important thing in the first meeting, beyond market size and some of those, is I think it's important to understand the product need at a slightly second, third level of detail, right? So usually that the need for the product is glossed over significantly, and the focus is a lot on the product, and rightly so. I think they should talk a lot about the product, but the market need for the product and why there is a current either a gap or unsolved space there, I think is not focused upon enough. When you come to diligence, I have seen a different kind of challenge, and most of these entrepreneurs have not dealt with finance before. They don't present their metrics in a very coherent manner. They don't understand cash flows. They don't understand working capital. They don't have the right kind of finance support. So it's important. This is not a very late stage diligence deal room situation I'm talking about. I'm talking about just very basic metric, business metric presentations and cash flow presentations are I think a little bit of a challenge for many entrepreneurs who don't have either a co-founder who is good at finance or themselves who is good at finance. Finally, when it comes to the IC, so it's a pivotal moment for a lot of them, and it's very important to read the room, right? And I've seen entrepreneurs come with a mindset to that meeting and just don't read what's happening, what's the feedback. Are people looking for more of, um, uh, you know, more on the product than just not understanding the product well enough? They're not understanding the product market gap well enough. They're not understanding their ability to get to profitability. So what is the IC anchoring upon? Please read that and be nimble and flexible in how you position your pitch. But on the other side of that coin is, don't get distracted by one or two questions and deviate totally from your whatever narrative that you wanted to cover, right? I've seen people get distracted. I have a very measured approach to being adaptive to what's happening there and making sure that you cover the ground that you have to cover.
Oh, thanks, Prashant. Okay, Sanjay, to you, now that you're based in San Francisco, you spend majority of your time in the Bay Area, and you have a deep investment track record in cross-border SaaS, right? I want to ask you how SaaS companies should think about fundraising in the Gen AI age. When Indian founders are building for the US and Western markets, how do you evaluate their pitch? What all should such founders have in their pitch interactions with VCs to have a successful early stage fundraise?
Sure, Venk. So, I would start my answer by going back to some of those first principles that Vani and Prashant also talked about, that it has to start with, that whole market and customer discovery phase, where you're finding out what the product gap is, and also thinking about why this founding team, is the best to meet that. So when we look at a very early stage startup, I would say, first of all, it's India's right to win between, building from Bangalore to the Bay Area is very much there. There's so many examples that have been proven. When I say Bangalore, I mean Bangalore, Chennai, India, everything. I think the key is that has the founding team thought about, are they obsessed about a customer problem, and have they also got some validation? In a deck, we would love to see, of course, you can start with the TAM, but also, have they validated, what the existing, the consideration set is there? What are they using today? Why are they not happy? What would cause them to switch? What would pricing look like? That's very, very important initially. You work with design partners. If it's just a deck that only has, financials or gets straight into the product, then that's a no-no, because it has to start with the customer. And earlier, Vani made an interesting point about TAM, that it's very easy, for a new founding team to come up and say, we're going after a $4 billion TAM. But if you look at most startups, even behemoths like Salesforce, they started with a wedge and then they expanded from there. So I think it is more interesting to see, okay, you're building in Gen AI, you're going after a very large TAM. How are you going to get there? You're going to get there in phases. There may be also a balance of inorganic and, organic growth. So, all that is very important. And also the team, if you're building, especially in AI, do you have a mix of course, a sales founder, a product founder? Do you also have somebody with strong research capabilities? Just the sales focused founder can't be in the valley or close to the customer. There also have to be feedback loops with the product side, because you have to constantly iterate, right? There are going to be many iterations in that first 1 year to 18 months. So we look for all of that, and some customer proof points. We know that early stage you're not going to have, you may have POCs on design partners, you're not going to have paying customers. But the idea is that, if the product is so compelling, do you have an initial demo that somebody likes? So we would like to see evidence of some, customer proof points. But again, I feel it's and some use cases which can be scalable and replicable, right? So I think verticalization is interesting, because if you start very broad, then you can go after a large TAM, but in one sense, your product is all things to all people. So sometimes starting Prashant and we have a common portfolio company called Sprinto, which is going after the whole compliance software space. And you've got some behemoths like Brata and Vanta in it, but the way they've tackled it, they're very, very measured first principles. They've gone after, SMB and mid-market first, established a wedge, and then they're going to go after enterprise. So I think those are good examples where there's a very thoughtful process of, and you see that in the first pitch. It's not like we're going to take over behemoth, from day one, but this is the thoughtful process on how we're going to build, and accordingly, you raise also in those different rounds.
Yeah, and Sanjay, and maybe this can everybody, each of us can chime in. If you are investing in a SaaS company, do you insist or do you like the founder to be in the place where he's selling? Mostly SaaS is in the US or Europe market. So do you expect the founder to be stationed at the customer country or whatever?
Yeah. This is a nuanced one. This is a trickier one. I think if you speak to, I think most founders who've made it, whether it's a Girish at Freshworks or others, the ones who moved to be closer to the customer, and it could be anywhere, right? I know, for example, Krishnan Chajbi sitting in Amsterdam in Europe. Of course, many founders sitting in the Valley. It's to be close to the customers. Many of them would say that they wish they had moved earlier. Once they moved. I think there are different ways to slice this. It is, I think just setting up, for example, there'll be a lot of questions on domicile. I think just setting up or domiciling a company doesn't really change anything, right? You have to appear, you have to be a global company, and you have to appear also as that. So I think the sales facing initial founding team has to be close to customers. In some cases, it makes sense to move day one. In other cases, you move after some time or just spend time close to customers. So I would say it's a nuanced one, but I think if you really have to play on the global stage, especially with what's happening in Silicon Valley, then also if there are truly Valley global investors looking at you, then remember they're going to evaluate you against everything they have in their own backyard, right? So you have to also appear to be the best global company, not just the best Indian company. And I'll tell you, today's founders are very ambitious. They really want to build the best global companies.
Great. Vani, you have any perspective on that?
I think as I already said in the beginning, I honestly feel that we are sitting at a great inflection point. We have a domestic opportunity which is significant, with or without AI-enabled solution. AI ultimately will be a technology, a core technology, much like internet is. And right now, a lot of what is going on is the infrastructure work around that, as in core technologies. And I think when we get to applications, which always has a little bit of a lag time. So the domestic opportunity India for India has over the next 2 decades just the best time, even in a century, that we have that opportunity. And then we have the India to global, some of which Sanjay and Prashant also refer to, and they have great portfolio for that as well. The India to global is really interesting, the way that opportunity has multiplied over time. And anytime there is a shift in core technologies, the enterprise, as well as consumer, of course, but consumer lacks a little bit, productivity tools go through a big shift, right? We know that from Slack was only possible because we have cloud, and cloud was only possible, and Document and DocuSign, all these were only possible because of certain internet infrastructure development that happened, and so on and so forth. So I think we are also at a great shift in technology, which means that all enterprise solutions will get rewritten from business models and core collaboration solutions and so forth. So, and India is at a great place today than ever before, to be able to do this. The reason is because development, sales, marketing, distribution is democratized and is not location dependent. Obviously, you need to have a deep understanding of the product and the customer, but you can run a business from anywhere. So I think we have this twin opportunity of India for India and India for the world. And if I can have just 30 seconds, I also think on core technologies, we always lament that why do we not build core technologies in India? And in fact, just yesterday, I was in this session where much like some countries have grant to allow for the early research that is required before commercialization is possible. And the VCs will come in only when there is some glimpse of ability for a technology to become commercial, right? Even if the revenue is not proven and validated. But there is that phase, and we don't have, credible source of funding for that. And we also don't have really role models and examples of that significantly. But I think on the ground, that's changing a lot. So I'm very optimistic if we give the next decade, the core technology companies, the deep tech or frontier tech companies will also really play a very significant role globally coming from India, much like if you take global SaaS, if you go 15 years back, there were no big global SaaS companies and no sort of a strong validation that we could do it. Obviously, that ship has sailed, and we know India will build for global SaaS. Same way, I think the deep tech opportunity, which is very nascent today and requires people to come together from very small funding or grant and so forth, and be patient with it. But I think if we fast forward a decade, we will see a lot emerge from that too. So that's what I'm most excited to engage and support, learn, and see how we collectively fulfill the potential that we do have to revitalize, continue to revitalize the Indian entrepreneurial opportunity.
Yeah. Thanks. That's great. We have a lot of audience questions, and so I'm going to try to see how as much as possible, and the rest, whoever has questions cannot get answered, we will figure out how to get some answers to you. So the first question, I don't know, Prashant, if you can take this. This is from Gokul. AI seems to be the hype wave in the developed regions. India is still largely back-end cheap outsourcing target for big companies. Do you think India needs to buy into this wave, or should we focus on the basics of the entire service sector?
No, I don't think it's an either or thing, Venk. And the services sector itself is an opportunity and is being disrupted by AI. So why would you not take advantage of that? So I think every service vertical that you can think of, from health to finance to all of these verticals, the current manpower and the current models that there exist would all get disrupted. And I think India is a great place to trial some of these models. And I think you're expanding the TAM of these service opportunities once you start leveraging AI tools for some of these applications. So I think we are seeing a new generation of AI companies that will build, and this is very new even in the Valley, right? So the whole service-based AI disruption is, and India is a great place to build them from.
Thanks. Another question comes from Raman Verma. He says, and maybe Sanjay, you can look at this. How do we find the right VC partner beyond the financing bit as the right partner? As the right partner can open doors in the domain you're building. What other things a startup should check when looking for a marriage with a VC?
This is interesting because this is the people business, right? If you think about public markets, it's about capital, and private markets is very much about people. One way of framing this as a founder is to think of the business plan of building a business like a puzzle, or like a, let's say, like a large pizza, and the good founders quickly recognize what they're good at, but also know what their blind spots are, what the weaknesses are. I think that's the strength of a founding team. And then doing some research, I think Prashant and Vani also talked about the importance of research. There are so many VCs today. I mean, I'll just share, like, when we started Blume, there were the angel groups, and then, there were just a handful of micro VCs. I think today there are more than 100. So, not all capital is equal.
I heard more than 400. So
And I think founders have to think about that, what is specifically important for your business, and then also diligence the VC. Remember, it's a two-way street. You use the word marriage, and I think that's very important. So it's not just, it's a very long-term marriage, it's a long-term relationship. So to be specific, go to market, connecting them to customers and partners. Hiring is obviously very key. Fundraising is interesting, but if you focus on the business, I think investors, find you. And then, at some point, I think you don't have to get a CFO upfront, but just getting like a VP of finance or somebody who understands, how the financials come together, because you may have a great product, but if you don't manage it as a business, it won't take off. So I think you see a lot of VCs focusing on the platform side beyond capital today, which is also important. And so I think founders have to also do that research, that not all capital is equal, and also find out who is the right VC at your stage. Today I can speak for the three of us. We've all become, larger VCs. The check sizes have moved up. There are lots of smaller micro VCs who have come up and do the first round. So I think you have to also not just match with the VC and the particular partner, but also match the stage and do that research carefully.
great. This question is from Srikant, and Vani, maybe you can take this. What extent does pedigree play? Does pedigree play an important role for founders raising their first round? How important is that? Like, I think he's basically saying if he says he's from Flipkart and a Flipstar, VCs are more interested. Is that true?
I'm absolutely the wrong person to ask this question. I'll tell you why, because I've often talked about potential versus pedigree, and I don't know why anybody would have funded me when I did my first company in 1996 if they were looking for pedigree. And I did end up building a company that produced great returns for investors and, of course, generated value for customers. So I think entrepreneurship is a very different game than sort of the pedigree of working in a great corporate or even making it into a great school. Entrepreneurship tests you at so many levels. And in fact, if I look back, my own journey as an entrepreneur was a deep process of self-awareness and self-development and character building, I would say, because hardships, which are inevitable on the road of entrepreneurship, brings out your ability to have resilience, your ability to continue when there are a lot of adversities, how to have core belief when maybe the rest of the world isn't yet ready to see it as you see it, and so many other things. That is a rite of passage. The glamour we read in the paper about entrepreneurship, the money, the funding, all of that is only sort of 1%. It's like climbing the toughest mountain. Of course, when you get to the summit, there is the dopamine, there is the joy, there is that fulfillment, but you have to plod along to get there, and all the challenges that then you have to overcome before you reach that summit, metaphorically. So I don't necessarily, in fact, you had asked me the question, what is something that I don't want founders doing when they're pitching? If they have a 45-minute slot, sometimes they've spent the first 15, if not the first 20 minutes, describing their education background, and you'll be surprised they start with where they went to high school. Honestly, doesn't matter, let alone where you did your engineering or what all you have accomplished in life. All that is maybe important, but I want to first understand what triggered you to think about this problem. What is your unique insight into this? Why are you so passionate to find a solution and build this company? So I want to understand your product. I want to understand your conviction, your commitment, your vision, all of that. And starting with the pedigree pitch, which is something that founders do a lot. I worked in, collectively, we have 150 man years of experience in blah, 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 these 5 companies. I mean, at least for me, it doesn't do anything. If anything, if you take too much time after a certain amount, we try to give you some hints to, can we move on to the product? Can we discuss this later? Sometimes they take the hint, sometimes they don't. If they don't, I think, those rarely result in a positive investment decision for us. So yeah, pedigree is less important than potential. Obviously, how do you convince someone about the potential is material, but we have nobody, I'm sure, here has made an investment just because the resume looks good.
Thanks.
Venk, can I just briefly add to that?
Sure, please.
This is very well said from Vani. Remember, this is not like a McKinsey or a Bain job, right? Where you're tracking for pedigree. I think the only limited point is that if any of us got an email from a college junior, or let's say we had worked at Flipkart, all it does is open the door. That's it, right? After that, it's all. So I'll just share a lighter note, but truly happened. Was there a business school seminar once, and they were trying to look at the link between top business schools and entrepreneurship, and one of the students, this in San Francisco, was badgering the professor about, can you tell us about the link, because all these people have, and this is not a knock on MBAs. I have an MBA also. And so he asked, is there a correlation between MBA and entrepreneurship? And the professor says, yes, there is. There's a negative correlation. So it's funny, right? On a lighter note, but the point is exactly what Rani said, is that what VCs are trying to find is that are you going to win on the upside, and are you also going to hurt on the downside? Are you hungry enough? Do you have the drive to break through a wall to make this happen? And I think that drive and the determination has nothing. It is about potential. It has nothing to do with pedigree. So I think that is well said, and I would fully agree with that.
Thank you. I think there's another question from Inshara. How should founders look at dilution at a very early stage? And how should a startup think about valuation? Prashant?
Oh, that's a very loaded question. How you need a half an hour to explain that. But I think both. I've seen both ends of the spectrum there. When founders just starting out the cap table wrong and diluting 40% even before they get started, and founders just compromising growth potential and just not looking at the right value of capital, right? So I think both are extremes, but it's also a function of the business, the type of market that you're trying to address. Some businesses, by their very nature, require more capital. There is more dilution, whether you like it or not. And some businesses are very frugal, and I think there is a lot more, in my mind, thoughtful, deliberate consciousness today in and in being more measured in how entrepreneurs look at dilution, and I think that's good. I think it's good for everybody, and being frugal with the business, and having a good balance between growth and profitability is also part of how you manage your dilutions. So there are a lot of dimensions which kind of come come together and have a role in determining, what's the right valuation. But on, on dilution, but on valuations, very clear before, now, and in the future. Don't build your business for valuation, and don't solve everything for valuation.
Thank you. We have a lot of questions, but do we have 5 more minutes from everybody? Can I take some more? Prashant and Vani.
Maybe one
more.
last question.
Okay.
Maybe one last question. Yeah.
Thank you. So this is from Siddharth. He says, what is the VC's perspective on SMB SaaS market? SMBs are yet to completely realize power of cloud because of costs. Can AI be a game changer for this segment? Vani?
I think there's a maturity curve for an SMB market. And there are a number of companies that have succeeded in targeting SMB market, whether that's, HR or, other areas where maybe technology wasn't applied because of cost and, more importantly, ease, right? Of course, cloud and SaaS makes that far more easier. So I do believe, and then of course there is B2B commerce platforms, which are at some level really targeting SMB companies. So whether that is at a revenue optimization or cost optimization, which are the only two things you can offer as value, there is opportunity in SMB. You have to be very careful though what the business model is, because and you can't do a heavy enterprise sales model. If you can provide the right value and not all the bells and whistles that may be relevant in a much larger, more complex setting, and either you have to be helping a company get more revenue, and we have a performance marketing company focused just on SMBs that has found very good traction. So there you're saying I can get you more leads, or I can, get you more customers, or, I can open new channels for you, or whatever that is. Or you have to provide cost optimization, and cost optimization is hard because SMB is a small entity. So the cost optimization that goes into their MRO, let us say, which is really where some of the B2B commerce companies have come, right? Your buying power access or your credit access, right? So which is where the cost of capital or cost of goods, if you can optimize, I think there is opportunity. So and we are already there. It's not about the future. There are a number of companies doing that, and more that will emerge because cost of doing business is going down at the infrastructure layer. So I think SMB is a great market to focus, but it's a rifle shooting sniper market. You can't be the mistake. Again, talking about mistakes, I see companies saying, I'll do large enterprise also, I'll do SMB also. They are very different from product requirements, from sales and marketing requirements. And again, the myth I hear is, no, but my product can scale for everything. That's not the point, right? And you look at that from your own engineering ability. We are not talking about whether you can build a product or not. Maybe you can build a product, but it's not the same product. And it's a big distraction if you focus on two very different markets, even if the problem at a high level of definition is the same. So there is an opportunity in SMB, but it's a very different sales marketing approach.
Okay, guys, thank you so much for giving your valuable time, Vani, Prashant, Sanjay. Really appreciate it. So I want to tell the audience, remember to apply for the TGS 500 challenge, and the link is available in the chat. Okay.
It's a great opportunity for people to meet VCs beyond the three of us, myself, Sanjay, and Prashant, who will be there in person. But many, many other VCs will be there. It's a great opportunity to network. And I believe on the TGS 100, both I and Prashant are on the jury. So we hope to see some of you there for sure. It's a great event for budding entrepreneurs to learn, network, and build your insights.
Prashant?
Yeah, thank you, Venk. Thank you for hosting this. And yeah, like Vani said, look forward to meeting a lot of the entrepreneurs and hearing a lot of the pitches for the TGS 100 challenge. Thank you.
Thank you. Sanjay?
Thank you, Venk. I think, also congrats to TiE Bangalore for putting this together, and wonderful to see my friends and co-panelists here. And all the best for the TGS, the competition and the session as well.
Thanks.
Thank you.
Thank you.
Thank you, everyone.